Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Wednesday, the 26th of September. The Fed, as expected, raised our rates just a quarter point as expected, and the market threw a fit, messing up some charts, I would imagine. We'll go ahead and take a look at that and see how it's going to impact us going forward. Before we do have a handful of S&P 500 companies coming out with earnings tomorrow before the market fell. As you can see here, ACN, CAG, Carnival, McCormick, not huge names like the Nike who came out and, of course, gapped down on their earnings, rallied up before giving way. But still some larger size companies. So we'll want to keep an eye on any of those if we are trading those stocks. But, of course, that's not what any of us are really interested in today, right? It was one of those days in the market. It was really flat, and things were looking pretty solid. I was finding all sorts of setups in the industrial sector in particular. I don't think they've been taken away personally, but I was finding a lot of interesting things. Netflix was threatening to break out. Activision Blizzard was breaking out. Saw some really cool things. And then, as expected, the Fed didn't do anything, that the market wasn't prepared for. They raised rates as they said they were going to. No surprises. We had a little pop initially, and then pretty much everything sold. So it's going to be one of those days. When I see days like that, if it's taken out technicals, obviously I'm going to be very weird. If the technicals are still intact, like we're going to see in a lot of things, certainly some things have been messed up, I think. But a lot of things, like the S&P, for example, I don't think the technicals have been broken. I still think we're in a good technical situation. But I am going to maybe proceed with a little caution tomorrow because there was quite a bit of selling, and most of it happened at the very, very end of the trading day today. So, of course, here you see the S&P really looked really good, gave it all back, closed in the red. We still are in the upward trend. We still are above the 20-day moving average. I'm not going to be surprised if we can get a little carryover selling-wise, but as long as our trend is intact, I'm going to continue to overall look at the market from a bullish point of view. NASDAQ maybe got it the worst today because they were actually able to break through that top that we've been watching them struggle with these past couple of weeks, looking really strong on a breakout. And, of course, well, they're right back where they started. We're right below it again. Those candles, are not, it's not a good candle. We've seen this candle many times together. When you lose all that momentum, sell all the way off and close at the bottom, it's very hard to want to get momentum going the next day. So I don't like that candle. I am going to caveat it because it really was part of something much bigger, a broad market sell-off. And so I'm not as concerned as maybe I was when we saw that happen on crude a few weeks back. But I do recognize it as a little bit of weakness. And that is, we're right back below that old resistance level. I'd like to see us break back above that. We'll see if we're able to do that. The Dow still pretty much just looks like a textbook bullish retracement for the most part. So its chart really looks just fine to me, continuing to pull back, haven't even come close to our 20-day moving average. Definitely the best looking of the index charts, in my opinion, here today and days gone by, but certainly here today. So I'm still looking at this from pullback. I found a lot of interesting industrial sector pullbacks, like ROK was one that was looking kind of interesting. XYL, another one off the top of my head. So there was quite a few that I thought, John Deere, can't forget John Deere. We're looking nice today. I do still like this the best overall for whatever that's worth to you. But we still are probably going to need that turnaround day. It's going to be hard to convince me tomorrow I should run up and buy, with the way the day closed and, really no confirmation or anything like that. Where we did get into trouble from a technical point of view is on our friends over in the Russell. They've been fighting at 17. We saw them pierce it the other day, only to rally back up and close back above it. Today, that didn't happen. Sold off, closed near the bottom. In my opinion, that's a big deal. That is a bearish signal for the Russell. We have broken a clear level of support. That's just not my crazy theory, right? We've been watching it for weeks, hold that point. So whatever you believe, you have to agree that it was a strong level of support. Breaking that to me is a bearish signal. We've made lower highs. I'm going to be, not bullish on the Russell. I can tell for at least a little bit. Of course, whenever we're looking at this type of a pattern, we'll want to watch and see how that old that old support holds us as resistance. That can and often is a challenge for this type of a pattern. But a very bearish development over in the Russell. When it broke, there was a lot of selling in the market, so no surprise, when something starts selling, it starts selling. But boy, when they broke, it got ugly, and it got ugly quick, because everybody was watching 1700 over on the Russell. As we move into the sectors, I'm going right back to where I was most of the summer with XLB in the material sector, and I'm just going to monitor it. Continue to sell off. Even before the broad market sell-off, we were seeing a lot of weakness in this sector. On a positive note, as it approached support, that did kind of hold. We didn't break that previous swing support, but this was a much deeper. Today's candle really puts me off of the overall material sector. I would have liked to see some sort of fight. Even if I saw some fight before the market sold off, I'd probably feel a little different. And I might feel a little different in a few days. Right now, though, I'm going to identify that support and say, yeah, I get it. But for me, I'm putting these right back on that I'm going to follow and let somebody else do stuff with the material sector, at least for the short term. Don't like how far that pulled back. Don't like the weakness that it was showing before the broad market really started to sell off. You're back on the list of things I don't like, material sector. Just got you off it. Oh, well. As we look at the energy sector, nothing really to see here. We did start to pull back even before the market started selling off, but not terribly shocking for us, right? We, of course, broke out. We had that gravestone doji yesterday showing some downward movement today. It was probably to be expected, pretty extended following this run. Let's monitor that breakout point. Of course, that's going to be the real key technical line for this chart in the short term. That should act as a support level for us if and when we get there. But really an unchanged chart over in the energy sector. Financials, much like materials, really struggled. Unlike materials, a lot of their selling did happen along with the broad market. Not all of it. They were showing some signs of weakness too. Closing back at support. On a positive note, they did kind of stick their nose right below it and kind of bounced a little bit, so to close right on top of the support. From a price point of view, I like that support level. From a movement and how we got here, I obviously don't like that. So for me, again, tomorrow's going to be one of those days I'm going to be pretty boring. I need to see stuff probably before I get too crazy. Let's see how it reacts here would be my thought process. Certainly don't want to see it break that support level. From a technical point of view, it shouldn't break that support level. So if it in fact does, that would be a little bit of a bearish signal. But that's an if. At least one day, and for whatever it's worth, it's all that we have. That did hold for us, but showing some pretty good signs of weakness over there. Relatively speaking, the industrial sector, I still am pretty satisfied with personally. It really was looking actually pretty good earlier on, but really held its own throughout all of the selling. It was one of the sectors that really was able to hold its own, not really throw a fit with the rest of the market. Yeah, there was some profit taking for sure and some selling, but as we compare the size of this candle to some of the other ones we've seen, it's no contest, right? I did see a lot, like I said, and I was kind of scouting through some things. I saw a lot of interesting charts, S&P 500 companies in the industrial sector. I'll continue to follow them going into the next part of the week. This is the one sector where I could at least theoretically say I would be bullish tomorrow. Yes, I'd need some upward movement, and I don't know that I'm going to get it. But if I were to see strength happen, taking out some, those previous days' highs tomorrow, I could maybe be sold on the industrial sector personally. Would, of course, need to see that. But I do like where we are overall, and I do like the relative strength that it showed amidst all the selling. Over in the tech sector, ran right up to that resistance and then caught up with the overall market. So I really think for the most part, your opinion probably is unchanged on tech and the NASDAQ index overall. We're just right back within this trading range. Still going to be watching that resistance level personally, but really don't think we've had any changes from a technical point of view like we maybe have in the financials and the material sector. So not too exciting there. Staples was actually really holding its own on its 50-day moving average today before it gave away all of its profits to close back down there. So that is something I will be watching. Let's kind of see how it develops these next couple of days at that 50-day moving average. At least that's my game plan. Don't see a really great entry tomorrow in this area. But we saw yesterday it kind of closed right about that 50. Today we see it put up the fight. Yes, it did close below it. And I have to admit that that is not good. But I want to see what it does tomorrow. Now, if I'm looking at this from a bearish point of view, I think you could argue that if we break yesterday's low, working back towards that previous swing low, that 200-day moving average is probably what we should expect. So if we do see much downward movement enough to break yesterday's low, my expectations would be there's a little more room to sell. If you're a bull, you clearly don't want to see that. Obviously, don't want to lose money, but from a technical point of view, that would be a little bit of a show of weakness. But that's where we find ourselves over in the staple sector today. Utilities were getting slaughtered before the market started selling off and didn't do them any favors. They just continued to fall, closing right about that 200-day moving average, right about that old range. And we know we have a lot of old resistance slash support in this general ballpark. Still super weak. I mean, showing no signs of life, not even trying. Even today, earlier in the day when there was a lot of buying going on, nobody was interested in the utility sector. It was falling. Still tremendous weakness. We are at a support level, so that is a price where if we do put up a fight, we shouldn't be terribly shocked. The 200-day moving average can and often does act as a support level. Obviously, I wouldn't trust it from a buying point of view. That's just me. Some people might want to buy it off of that 200, but I have a hard time wanting to pile on at this point. We're very extended. We're at support. We were pretty close to it yesterday. I am a big believer in the moving averages, particularly the 50 and the 200-day moving average or period moving averages. So I'd like to see what it does here. I certainly wouldn't mind seeing a little bit of a bearish retracement. I'll be rooting for it over the next few days, potentially looking at bearish entry sometime next week. If I'm still bearish, I'm pretty happy that I am. That's for sure. Not any positive signs in utilities, in my opinion, at least. Healthcare broke out this morning and was really cooking. Was really cooking on all cylinders. Broke those little highs that have been dealing with these last few trading days. Really took off. Closed pretty flat, much like the Nasdaq, kind of a negative candle. Got caught up in the selling, but again, relatively speaking to everything else, our industrials and our healthcare, two of our strongest, if not the strongest areas in the market, held up relatively well. Neither one of them really scared me off from a technical point of view. Really, my opinion is unchanged on the healthcare sector. I still like it. It's so strong. It did show relative strength amidst the selling again. And it did sell off, though. There's no way around that. Everything sold off. So I guess that doesn't make them special today. So we were really taking a run at the resistance in the discretionary sector as well. We were really close to testing that high point before kind of slipping back into that trading zone. So really nothing has changed here from a technical point of view. In my mind, we're still kind of in that sideways. We did see some nice momentum. I imagine if the market's going to continue to sell off for a few days, they probably won't be breaking out. If buyers are looking at this as an opportunity to jump in from a broad point of view, wouldn't be surprised if they take another run at that resistance level. But at least for today, resistance wins yet again. As we look at real estate, much like utilities, they didn't need a bunch of selling in the market to struggle today. We're struggling before and, of course, during the sell. They did break that previous swing and are rapidly approaching. And that was a pretty strong, we watched this together. That was resistance for a while. Then it was a breakout point. Then it was a great entry point on a pullback. It danced there for a little while, but it constantly held. That's not good, real estate. You should have at least tried, and you didn't. Not liking that one bit, still very bearish on this sector. Much like the utility sector, we are pretty extended. And all that really means is I'm going to be not really super considering new entries. If I'm in bearish trades on utilities or real estate right now, I might be thinking about tightening up stop losses. converting into spreads. If they bought a call or bought a put, or bought a put option, scaling out of the trade, locking in some profits. Just not really loving. They never, and I think I'm not alone. Whenever you have things that are really extended to the up or the downside, I think most of us want to see it pull back before we enter new positions or rally if we're talking bearish. So that's where I find myself in real estate, much like the utility sector, but certainly can't give me a bullish argument for it right now. I can't see one at least. And lastly, our communication services had a strong start to the day, actually broke that little resistance level from a few days back, broke its 50-day moving average, which we finally have enough information to know where our 50-period moving average is, and of course, smacked back down with the rest of the market. So I'm not sure exactly what to make out of that. A lot of these things, I'm going to take that wait and see approach going into tomorrow. I don't want to get crazy. I understand some people are going to want to do lots of different things, and that's okay for me. I think you be cautious no matter where you're at tomorrow, whether you're looking at things from a bullish or a bearish point of view. I think you take that modest, that cautious approach. The market's not going anywhere, and then who knows where we find ourselves tomorrow. Maybe we have a little better handle on things. Just that late day sell-off, I've seen that carry over both ways. The next day, everybody buy it because it's a sweet deal. The next day, it throw a fit because it started the day before. I'm going to need some information before I get too excited one way or the other. But that is where we find ourselves overall in our sector. So for the most part, we held our own in the sectors, even, materials and financials, who, in my opinion, at least, are showing weakness. They didn't break support. And I don't love that they got all the way to support. They're supposed to, make higher levels of support in those trends, but they didn't break support. And I do have to give them credit there. But really, it was a heck of a way to end the day in the market. If you were watching it, it was not boring. So we didn't really see much of anything happen over in the gold market when post or pre or post the Fed announcement. Really continued to stick within this trading range. Another day, another hanging out in the range. I have to keep drawing these lines out even further on a few of these things because they've been in these sideways stretches for so long. So really nothing has changed here. We're still looking at a potential break to the upside or potential break to the downside or neutral strategies while we're waiting for either of those two things to happen. Over in the silver market, we did kind of pull back towards that old breakout point. And so if, and again, as I said, I wasn't really very excited about that silver break, and I'm still not. But if that was something that you were excited about, I think you're happy with today's development. We did come back down towards that breakout point. If you are bullish on silver, I think really why you are is you're betting that now we're above this, we're going to stay above this in the short term and get a little bit of upward movement. So being as close to it as possible when you get to create your bullish entry is obviously a good thing. You're risking less for more upside. So I do think if you are bullish, you're not unhappy with this development because we did hold the breakout point. We're back there if you're looking to build entries. If you're bear, well, I don't think there's anything to see here today. Let's continue to see how it holds up there. Let's see how it works. And if it does work up in towards resistance and towards that 50, let's see how much conviction those buyers have. But at least for today, we hold that breakout. It wasn't pretty, but a hold is a hold. Right? The dollar really didn't have too much of a overall movement today. We did see some back and forth, much like we've seen these last few trading days, right below that breakdown point. So again, really nothing to see on the dollar that we didn't see yesterday or the day before. Continue to be showing some overall weakness. I would like to see it, test this old support as resistance, see what happens there. That should be a struggle. If it can break through, that would be a bullish signal. If it gets knocked back down, which would be my expectations on a chart that looks like this, taking my opinion about the dollar in this case out of it, that would be certainly a bearish signal if we work and get pushed back down. So let's monitor that. I don't think really anything though has changed technically on the dollar over the past few days. Either on the breakdown and are on that side of things, or you're waiting for some bullish signals and on that side of things. I don't think anything happened on that chart to change your mind today. I'm going to go to a weekly because it's just easier to see the natural gas chart on the weekly right now. And here we have a break. Of course, we had that break yesterday. We did see that we sold off today as we were looking at that daily chart. We did close above 3, which psychologically I think is important. I'm not terribly surprised at any time, something to this extent, it does take some profits. So I do think we are still looking at this from a potential break point of view. But, we also know the resistance is an area. It's definitely an area, can be on this natural gas and on this commodity type of stuff. If we continue to struggle here, that might give us that pullback opportunity. And I don't think we'd really mind that, unless you're in it. Obviously, if you're a bull in it, you would very much mind a pullback starting up right now, right? But if you're not, again, when you're so strong, it's hard to expect to get a very deep pullback because we've seen it all over the place. When things are really cooking on all cylinders, traders are just looking for excuses to buy. And at least in my mind, natural gas has been that hot. So I don't expect a deep pullback, but that doesn't mean I can't want one. And that doesn't mean I can't ask for one. Certainly doesn't mean I can't watch for one, right? So, but certainly, really, I don't think we've changed all that much. I do think, for whatever it's worth, closing above 3 is a psychological win on natural gas right now. And then lastly, we have our crude oil sold off a bit today, off of those highs from the last couple of days. Nothing really too crazy or dramatic. Really, again, much like yesterday, the break continues to hold. That is a positive bullish development. A pullback is not an unreasonable thing, even though you may not want it. If you're long, of course, you don't want a pullback, but hasn't done anything that really has changed my mind from my overall stance on it. As long as we hold this breakout point, I do think overall we look to work up towards those highs in the 74 range. So certainly the pullback hasn't, given us any confirmation that tomorrow the day needs to stop. We certainly pretty much closed near the bottom of the day. So not any strong signals that let's jump in right now if we're thinking about it from a bullish point of view. But again, it's perfectly fine for things to pull back. Just because we don't want them to doesn't mean it's not normal and healthy, right? So we'll continue to monitor that. But overall, we still kind of are in the same spot, still holding the breakout, which certainly is a bullish signal, but kind of in that little pullbacky phase, if you will, as we currently speak. So, I mean, it was a day in the market, and it really was kind of, just a very reasonable day till about the last half hour, 45 minutes. And then everything just started going crazy, which is going to, mess up some of our chart patterns, which, can be frustrating. I understand that. But it's also going to open up opportunities that you might not have got otherwise. On the other hand, I mean, if the market would have just taken off today, instead of selling off those last 30 minutes, just ran up those last 30 minutes, we'd be here complaining that it moved up too much today and we don't have any great entry points tomorrow, right? So there's always things that we can do. There's still going to be some interesting trade setups. I'm of the opinion that whenever something, not jarring is way too strong of a word, but I'm going to use it anyway, kind of comes up, oh, that was a lot of selling in a very short period of time, right? However you view it, it was quite a bit of selling to close the day. And that can be one of those things that can just cause confusion, can cause panic, can cause fear. I'm not saying that the market's going to crash. I don't believe that. I'll believe that when the technicals tell me I should. But I've seen many times where that can kind of carry over into some indecision. I do think when you see things that aren't pretty, aren't sensible, aren't well behaved, you always take a cautious approach because the market's not going anywhere. If I don't do anything tomorrow, so be it. Now, maybe I will, right? Maybe I will. I don't have to not do anything. But I don't need to feel like I better jump in or I'm going to miss out on whatever, bull or bear side of things. There's definitely some interesting setups out there. That's for sure. With that, ladies and gentlemen, that has been the market recap for a pretty eventful little Wednesday. As always, it is my pleasure, and I do appreciate everybody's time. Be sure to subscribe to the YouTube channel, hit that notification bell if you haven't already, so you can be alerted to any new videos that we're doing over here. And be sure to follow us over at Tackle Trading on Twitter. If you did enjoy the market recap, it is always appreciated and helpful if you do give it a thumbs up. And with that, get out of here. Happy trading, and I will see you in the next one.